It's a rolling process which has already started. I mean, we've heard a lot about how large manufacturing organizations have decided to change their manufacturing plans. The likes of Japanese car makers, for example, have decided they won't expand their facilities in the UK. Banks, of course, have to move people out of London and into other continental European locations in order to prepare themselves for the potential that they won't have any business continuity in the event of a hard Brexit. So in that sense, Brexit has already happened. And the data that we've seen over the course of this morning even tells you that the UK economy has been badly affected by Brexit-related uncertainty over the course of the last month alone, with the services PMI dropping below 50.
Yeah, and so when you look at that, is there a way to quantify, Peter, how much of the Brexit impact is in any of the numbers that you dig into every day?
Well, it's very hard to give a reasonable assessment of it, but I mean, I would say that on a quarterly basis, you've probably knocked maybe a quarter or maybe 2/10 off the quarterly GDP growth rate, and that's certainly something which I think has been evidence over the course of the last 30 months. And as things stand, it's unlikely to recover anytime soon. So I think we're in an era of much weaker GDP growth. And if you look at what we expected prior to the referendum, GDP growth over the order of, say, 2, maybe slightly above 2% per year. Now it's 1.5%. And I think a large chunk of that can be attributed to Brexit.
Are you surprised more large multinational companies haven't left England?
Not surprised. I mean, I think in a sense that they are waiting and seeing exactly how the situation pans out. I mean, those companies which decide that they have to go for business continuity reasons obviously have gone. But I think a lot of companies still think that they've got a big vested interest in being in the UK, and as a consequence, they can afford to wait until such times as the situation becomes more clear. But let's not be in any doubt that the UK's reputation for being a good place to do business has taken a bit of a bashing over the past couple of years.
If we get a deal or a one-year extension, we got Willem Marx coming up right after you. He'll tell us about where we stand news-wise. But if we get some kind of extension to a Brexit, delay, Peter, is that a positive thing, or is it just literally just buying time from nothing?
Well, I think you're right in the sense it's just buying time, but equally, if it avoids the hard Brexit, then it clearly is a positive. I mean, I've been discussing this with clients quite a lot over the course of recent months. The last thing we want to see is the economy fall off a cliff. So if it's if we're trading off uncertainty for the cliff edge, then I'll take the uncertainty.
But is anything better than a hard Brexit, a no-deal Brexit?
Oh, I think anything's better than that. I mean, even if you don't think that a hard Brexit is, the impact of a hard Brexit will be smaller than, is commonly imagined, you just don't want to run the risk. So, I mean, I think the deal that Theresa May's government negotiated with the EU on economic grounds alone is probably the best it's going to be deliverable. But unfortunately, many MPs in her own party seem to think that there's a better deal on the table. There isn't. So basically, it's a case of take her deal, accept a hard Brexit, or look for a postponement. And I think at the moment the government is looking for the postponement option.